Hello, everyone. A very good evening to all of you on behalf of Tradetron. So today we have organized a session from AlgoWays. So today's speaker is Mr. Deepak Kumar, who is the founder of AlgoWays, which is an algo services provider and strategy creator on Tradetron. So just to give a brief introduction about Deepak sir, he has about 22 years of trading experience in National Stock Exchange, as well as 15 years of trading experience in commodities, especially in crude oil. And he's also a very successful algo service provider. So today's session is about how you can reuse the margin that you have left after NSE trading hours, and same can be used for MCX commodities trading.
Mr. Nelson, you there?
Mute yourself. After this, according to his experience, he will be able to guide you with regards to how to use the margin for commodities trading, and he will be able to take you through this entire session. And we will be providing a recording of this session to you on a YouTube channel, so you can accordingly proceed with that. Just give me a minute.
अच्छा, आप मेरे को आवाज नहीं आ रहा है आपका? No, but okay, fine. So can I start now? Okay. Hi guys, this is Deepak, and today we are going to discuss something about crude oil. I hope I am audible. Can somebody confirm this? Okay, fair enough. So basically, the purpose of starting crude oil trading, the USP which it has is that we can use the idle margin after NSE is closed. Because we know after in December 2020, the exchange and the SEBI has allowed to use same margin for the brokers for NSE, MCX and currency segments. Earlier, it was different margins that we have to keep, but now since December 2020, the regulators have allowed to use the same margin. Now, there are still some brokers which are not doing so. I think Zerodha is one of them, and one broker which I used very frequently, and most of my trading happens in Trustline. That broker also does not allow it. So the brokers who are having different entity for NSE and MCX, they don't allow to use the same margin. But otherwise, other low-cost brokers like Finracia, LIS Blue, Fires, IIFL, Dhan, they all allow it. And most of the people are doing trading same way. In fact, even if you pledge your margin, your stocks for the collateral, you can use that margin as well for the crude oil trading, which is people are doing in most popular brokers like Finracia, IIFL, etc. So what we will do, I will brief a few things about crude oil for next 20 minutes or so. And then if there is any question, then we can discuss those. So let me start this small presentation. So these are the few things which we will be discussing. What is crude oil future and option expiries, crude oil contract specification, AlgoWays strategies, past performance, how it has done. There is a major thing that P&L difference between paper trading and live trading. Backtesting results are they useful for deciding, and then expenses and profitability, week-wise, how it varies during expiry in different weeks. And most important is what are the major risks involved in crude oil trading, and finally, how to choose the right broker for crude oil. Now, these are the very basic things that lot size is 100, everybody knows. Margin required for crude oil future is around 270K. Margin required for crude oil call option and sell option also is around same, 2.7 lakhs. But the thing is that it is not like NSE. In NSE, if we need say 1.7 lakhs for Bank Nifty call option, and if we sell the put option, we don't need any extra margin. But it is not the case in crude oil options. If the call requirement is 2.7 lakhs and you want to sell a put also, you need another 2.7 lakhs. So that makes the margin requirement for one strategy as 5.5 lakhs or 5.4 lakhs. It varies with the broker. So let us say 5.5 lakhs will be the margin requirement for selling a paired option, call and put. Expiry is monthly. Unlike in NSE, we have weekly expiries now. We don't have weekly expiries in crude oil options. And that is one of the reasons that we don't have a lot of volumes and liquidity. Now, there are different, the expiry is very, very critical point to discuss. Like in NSE, we have expiry fixed as on last Thursday of the month. It is not so in crude oil. See, there are two expiries in crude oil. One is future expiry. Other one is options expiry. The future expiry, it happens 5 working days prior to 25th. So if say 25th is a working day, then include this 25th also and reverse back by 5 days, you will get the crude oil expiry. Like this month, we had expiry of crude oil futures as 19th. So 25 minus 5 working days comes to 19th. And then the option expiry, which is important to us for our trading, it is 2 working days prior to the future expiry. So 19th was future expiry. Then there were 2 holidays, Saturday and Sunday before 19th. And that is why the expiry of options happened to be on 15th in case of December. So that is what we should know when the expiries are, because knowing expiry is very important to decide whether to trade, when not to trade. We'll come to that point as we go along. Now, I also heard a lot of things about theta decay in crude oil trading and all. When people ask, there is a wide difference between crude oil and option trading and NSE indices option trading. Number one, decay. Now, decay in NSE is time bound. Basically, we know that every week it has to become 0. So we know that how the decay will happen. It will be less on Friday and gradually it will increase. And ultimately on Thursday, it has to collapse to the nearest to the max pain point. But in case of crude, it is not so. Crude oil trading, when we start in the expiry, we are not relying on decay. On what we are relying, we will discuss as we go along with this. Similarly, IV spikes. In NSE, if you see when, like yesterday itself, we can take the example on expiry, when the market falls or rises very fast, very quickly. So suppose yesterday's example, we sold CE and PE, and when the market fell suddenly, the PE spiked a lot. So that IV spikes are much more prevalent in NSE than in MCX. So yesterday, this put options premiums increased drastically, but the crude oil option did not decrease to handle or to manage or to compensate the premium increase in PE. And that is the reason when in NSE, we have a big candle on 5 minutes or say 2 minutes or 10 minutes chart. We will ultimately get into losses because one strike is not able to manage the IV spike of the other strike. So that is and that this happens more so in case of when market falls, because PE is very difficult to control when the market falls in a big way. Example is yesterday. But in case of crude oil, it is not so. Even if the market falls rapidly, depending upon what are the premiums entered, the one strike balances other strike. The spikes are not that much. Basically, what I mean to say, the spikes in the premium is not as much as in NSE. Slippages in NSE, because we have good volumes now in after it became weekly expiry. So the slippages are very minimal. Okay, but in case of crude oil option, the major issue is volumes and the liquidity. So we have higher slippages here. So initial days of the expiry, new expiry, we will get huge slippages. That is why those are the days when we should like avoid the trading, like first week of the new expiry. So slippages is entirely different in case of crude oil. Volumes, as I told, volumes are in MCX is very less, though they are increasing. On 14th itself, the MCX has recorded highest volume of 72,000 crore on crude oil option. That was the lifetime high for crude oil option trading. It is increasing, but it is not at comfort level where we will feel comfortable about slippages and volumes. So these are the differences between crude oil option trading and NST trading. Now, this is very important point. I have seen in TradeTron Telegram channel also few people advertising about crude oil trading strategies by posting the paper trade performance data, which is recorded by TradeTron. There is vast difference, huge difference between paper trade and actual trading. So we should not get carried away. If somebody shows you, even if I show you a paper trade result or an equity curve, which is built by TradeTron data capturing, we should not trust that, and that is nowhere near the live auto trading. There is a vast difference actually. So in last 4 months since we are trading live, you can assume that your live auto results will be around 55 to 60% of the paper trade results. Same deployment, same strategy, same entry timing, same exit timing. But if paper trade is showing you, say, suppose 3,000 rupees profit, you can assume that you will get around 1,500 to 1,800 rupees only. So this is very important. Let me show you an example. Now this is, I hope this is visible. This is the equity curve of one of the strategy taken from TradeTron. This is my strategy, AW03. Is it visible? Can somebody confirm? The equity curve? Okay. So you can see this equity curve is almost 45 degree straight line. Okay. If you go down, you will see that out of from 550K in 3 months time, it has given 50% return already, and the drawdown is 2%. And the Sharpe ratio is 16, which is unbelievable actually. It cannot happen in practical live trading. You can see the monthly result, which is shown by TradeTron, and this is right data as far as the paper trade is concerned. You will see 5%, 11%, 11%, 9%, and December 6%, 6.5% this month. But these results are not practically doable. So don't get carried away by anybody's strategy or my strategy seeing the paper trade results. Okay, let me go back to the presentation. So don't use, okay, and if you do backtest, so backtest is not possible in TradeTron for MCX strategies because data is not there. But still, if somebody shows you backtest done outside TradeTron like AmiBroker or some other platform, we cannot trust because backtest will assume the entry and exit based on the theoretical value as the strategy has thrown to it. But it does not consider anything about the slippages and all. So again, the backtest results and the paper trade results will be the same mismatch between these theoretical values of backtest and paper trade vis-a-vis live auto trading. So this thing is something which we need to keep in mind. So we should not take paper trade results and backtest results as our criteria for selection of a strategy. Now this webinar is not about the marketing of AlgoWage strategies, but I'll just briefly touch upon the strategies because we have been discussing a lot in AlgoWage Telegram channel, as well as there are certain videos on YouTube also to explain the strategy and how they work. So we are not going to touch much upon that here. but still I'll brief a little bit. We have total 7 strategies intraday. And the strategy are number one, they are time diversified. Number two, they are diversified by entries, the type of entry they take. Some strategies are there which, depending upon the market, will take straddle or strangle. It depends upon the market and the entry time. Some are mandatorily will be taking as straddle as the entry, like AW03, which is one of the most successful strategy. There is one semi-directional strategy. It means that it will start with a straddle, but it will cut one of the leg, either losing leg or the winning leg, depending upon the market and certain logic kept behind it. It may cut the winning leg first, or it may sometimes cut the losing leg first. Depends upon how strong the momentum is. If the momentum is strong, then it will cut the losing leg first in a minimum loss. If the momentum is not there and market is sideways, then it will cut the winning leg and try to manage the profitability of the strategy. In this case, when the one leg cuts, the stop loss of the strategy initially could be around 2000, but when the one leg gets cut, the stop loss gets shifted to some 800 rupees only. So if one leg has gone, it means that you can only lose 800 rupees in that strategy from there. So these are the different times. Now I have, based on the experience, I have developed this allocation matrix, how we should deploy, depending upon the capital one has. So starting from 6 lakhs up to 50 lakhs and up to 1 crore, I have given this matrix. It is available in Telegram channel also and in Google Sheet as well. And I have 2 positional strategies now, which start from first week of expiry till the next month's expiry, and the results have been wonderful actually. If somebody has sufficient capital and you want to deploy completely positionals on crude oil, then with safety we can easily target around 5 to 6% returns in positional as well. But the drawback here is that we will not be able to do the NSE trading. It becomes the full-fledged margin dedicated to crude oil trading. Let me just share some past performance of these strategies, even though it is available in the Google Sheet as well, but I have taken that from there once. So this is December month. Till now. So it has been average month has been going on. One day we did not trade, that is on expiry, because on expiry day, the trading is not allowed in current month contract by the brokers. So otherwise it has been around like say 2.5% kind of return till now in this month. So another 1 week is left. So maybe around 3.5% we will end up with. November, this is November. November also was not a good month. November, we had 4 to 5 consecutive days stop loss in the first week of the expiry. These are the days. Starting from 17th till 23rd, 24th, it was very bad. So after all that, we ended up around 2.21% return. October was good. October, we ended up around, 1 second. 85,000 on 17 lakhs, that is around 5% return. And if you see here, the difference between paper trade and result is, see, you can see AW03 out of 52,000 paper trade returns, 31,000 was the realized returns in live auto. So that is around 59%. Same is the case with AW04, 54% were the live auto results of paper trading. So that is what I mentioned in the beginning, that we only have around 55 to 60% kind of expectation in live auto results vis-a-vis the paper trade or the backtest results. Now, the profit expectancy and the expenses will be different for different weeks in a expiry series. So when we talk about first week, it's a very low probability. Low probability means probability of making good profit is low. The reason I mentioned earlier also is again the slippages, low volumes, nil decay. So these three are the reasons that the first week of the new expiry is a low probability week. Risk is high and the expenses also is high. Expenses means your brokerage plus your CTT and other taxes, government levies is high. High means when I say high, if we consider zero brokerage, this is around 300 to 350 rupees per counter. It means if you sell a straddle and cover that, you will end up giving away to exchange and to the government around 300 to 350 rupees. Now, second and third week are the moderate week. Second week starts roughly from 25th, which will be starting from Monday actually. And this week is moderate. The risk is also moderate, and the expenses is slightly less than the first week. It may be around 200 to 250 rupees in the second week, and then 150 to 200 rupees in the third week. Fourth week is high return, moderate risk, and low expenses. The expenses comes down to around 80 rupees per counter, 80 to 100 rupees per counter, depending upon the premiums on different days. So fourth week is high expectancy, moderate risk, and low expenses week. But we cannot simply say that, okay, first 3 weeks are not good, so I will not trade. I will trade only from the fourth week. This is something which is generalized from the experience, but we may have some good days in second and third week. And so what is the right time to trade is that on the first week, we should not be trading if we can avoid trading, but there are some compulsive people who want to do trading compulsively. So they should do with minimal quantity, maybe 1x or 2x if they have multiple deployment margin. Now the challenge here is in the last week of the month, some brokers don't allow trading in current month contracts, and hence chance of losing that opportunity. The reason for this is that the tender period starts 5 days prior to the expiry. And in tender period, some of the brokers who play very safe, they don't allow the current month contract. So the whole purpose of MCX trading gets lost basically, because last week is a very high probability week, and some brokers, I will not name the brokers, people know who are those brokers, they don't allow the trading in the last week. So we need to select the brokers very wisely, considering all these factors. On expiry day, no brokers allow trading on the current month contracts, though the premiums are likely to go zero and it could be a good profitable day. But unfortunately, on expiry, no broker allows the trading except IIFL. India Infoline allows it till 6 p.m. Last time, this expiry, they allowed the trading to go on till 6 p.m. on expiry day also. After 6 p.m., they blocked all the new entries. Only the existing positions could be covered. Another broker is Trustline. They allow it full day, but that broker has separate account of MCX, so there is no advantage of reusing the capital. We have to maintain separate capital in NSE and MCX both. Now choosing a broker, which is I just mentioned, not allowing current month contract in last week, which I mentioned. The second biggest risk wala jo issue hai with these broker is that whenever you fire a trade through algo in CE and PE, they have their own criteria of defining a particular strike, whether it is liquid or illiquid. So suppose one strike goes through, CE goes through and it executes. And when it tries to execute PE, as per this broker criteria, they may find it that it is illiquid and the trading is not allowed. So it becomes more risky because your one leg has executed and other leg has not been allowed by the broker. So the strategy will go into error, and that error cannot be cleared basically from your end because broker is not allowing the trading. So in that case, we have to exit the trade completely and sit quiet. And this is very uncertain. We never know that in which strategy at what time the second strike will not be allowed. So it is much more risky than not allowing a trading in 1 week. So these are the things which we should take care while selecting the broker. Because this second point is very risky. First point, okay, we know that in this week they will not allow trading, so we are prepared mentally. But what second thing is that we cannot leave the screen also, because we never know when the second strike will get rejected. And by the time you try to cover it manually or through TradeProne, the single strike, if market has moved substantially, it may result you into losses. It may give the profit also, but that is purely luck. We never know that. So the selection of broker becomes very vital in case of crude oil trading. The recommended broker is Finvicia. They don't have any issue till 1 day prior to the expiry. They allow the trading. On expiry day, they don't allow it. Execution is good. Brokerage, of course, is less. India Infoline is one more better broker. They even allow on expiry day also till 6 p.m. And we don't face errors, as I mentioned, that one strike is illiquid, second strike has got triggered. So those things are not there. Dhan is also good. And the other criteria for you will be that whether they are allowing you to use the same margin or not. Zerodha does not allow. I don't know about other brokers. So you have to find out whether the broker is fitting in all these criteria or not. And select the broker which is fitting in all these, which is ticking all the boxes which we have discussed here. Now the major risk. See, the trading itself is a risky proposition, risky business. That we all know, and knowing that we come to the market and trade, knowing well that trading carries the risk. Now, other than that, there are some system risks. This is very critical actually. Execution error and extra position in TT. So this is a TT issue, and I have raised this to Mr. Vikram and TradeProne management also. You would have seen when a strategy goes into error and you clear the error, it takes double the position for that particular leg which was not executed initially. So one extra position goes if the margin is available. If margin is not there, the strategy will continue to be in error. So, but this is something which TradeProne can handle, and they can sort this out. So that is still manageable. The second risk is liquidity or no fill risk. What is that actually? Entry in illiquid strikes or entry or exit at unrealistic price. Let me give you a live example which happened on 18th November with me. Let me open an Excel. See, that particular day, crude was trading at 6,700 when we started trading. And of course, the CEPE for this strike, even 6,600 strike or above this 6,500, sorry, below this 6,500 strike also was liquid. And if we were executing orders in these strikes, the strategy was executing order in these strikes, there was no issue. Order, enough liquidity was there. The trades were going well with not much slippages. So when at 3:30 we start trading in this strike, you can imagine that the strikes which are here, 6,400, 6,300, they will be having, they may not be having a single lot traded since morning because it is 400 points away. So since morning, these strikes did not have any trade, any liquidity at all. But what happened that particular day, the market started sliding one day and it came to 6,600, 6,500. but these below strikes were not active. So one of the strategy was entered at 6,700, and when the market went to 6,500 or it came to 6,470 type, the strategy's logic triggered a repair. It has not hit the stop loss yet, but it triggered a repair. And as per the repair, it was supposed to sell a call option of 6,400. But this was not available. The liquidity was not available in this particular store. So the TT sent the order, a sell order at 6,400. It got executed with some 4 or 5 rupees slippages at 409. But after it got executed, because it had some slippage also 500, 600 rupees, the strategy level stop loss reached of 3,000 rupees. Now the strategy has sent the exit orders for call and option and put option. Now put option was at 6,600, so it got executed without much slippages. But when this trade was sold, the CE was sold, it was only having 5 lots traded till then for the day. So liquidity was not there at all. Now the system sent the order to cover the CE, but CE did not find the buyers because the liquidity was not there. And what is the logic in strategy and trade prone order placement? It is like it will send the order at LTP as limit order, and if it does not get executed, it will retry to sell it again on the next LTP available. So by the time it sent the order, there was nobody to buy it, and the strategy got executed at 768. So there was a loss of around almost 40,000. 768 minus 409. So 35,900 was the loss, just because this particular strike was not having liquidity, and we did not have control over how to handle that situation if the liquidity is not there. So subsequent to this, the lesson, and the funny thing is that I got a letter from exchange asking an explanation to me, saying why I have executed an order on an unrealistic price, as if it was my fault. I had to give an explanation, otherwise my account would be blocked. That was the threat from exchange. So that was clarified to them, and in fact, I put it on them that what are the precautions you have taken to avoid these kind of freak trades, like NSE has done. So that matter was sorted out. So to arrest this, what we have done in the strategy, certain changes were made. That strategy will not take any adjustment or any repair if the market has drastically moved to a level where the strikes don't have enough liquidity. So suppose in this case, if market would have come at 6,500, as per the new improvement which I have done, it will not take the repair or a new entry itself because of this new change in the strategy. So what it would have done in the if the logic was as it is now, it would have exited the complete trade even without hitting the stop loss when the market reached to a repair situation, and it was at the extreme end of the day's range where we know that the liquidity will be limited. So in that case, it would have done, and it is doing now basically, that it will not take a new trade, it will not take a repair. Instead, it will exit even if the stop loss of the strategy has not reached. So if the stop loss is 3,000 and the loss when it reached to this level is 1,500 rupees, so it will exit at 1,500 rupees and sit quiet. It will not take a trade till a certain criteria is found that the enough liquidity is there in the strike. So this change has been done, and you can see the example of this particular thing in today's trade also. Like today's trade, this AW03 and all, they have entry time at 3:45. It did not enter today at 3:45 because of this change, because the market was trading at the day's high range, basically at 6,580 or 90, and that was the high point. if it would have taken 6,600 rupee strike, maybe the liquidity would have been less and we would have got more slippage. So it waited for the liquidity to build up and market to settle, and then it took the entry, I think, around 4:30 or so. So these changes have been done to arrest this kind of risk, to avoid this kind of freak trades. And another change which we have done is that when the market falls in one, because all the strategies are non-directional. So if the market falls suddenly, say 200, 300 points, there is certain criteria that the trade will exit without taking any further adjustments or anything even if it is a loss and the loss has not reached to that strategy, overall universal exit loss, it will still exit and will wait for the market to settle and take the trade. So this has helped a lot, and I hope we will not have this systematic risk or the market risk in future. We don't know scenario tomorrow. There could be another scenario where we will find out that this also is a risk. So we have to attend that too, depending upon how the risk has come and how to handle that. I think that's it. These are my contact details. I'll just paste this in the chat also. You can note it down and get connected with me. That's it from my side. We'll take some questions if there is any. Let me just put these contact details in the chat first. Okay, you can just copy and paste it with you. Okay, let me just take the questions now. Will the recording be available later? Yes. All the strategies are available on TradeTron. The answer is yes. Does the live offline results matches with live auto? Mr. Praveen Gode. No, live auto and live offline result will not match. It will be almost same like paper trading and live auto comparison. It's okay to not trade on expiry day, correct? See, it is advisable to trade on expiry day, but unfortunately nobody allows to trade in expiry days. So when we should not trade is, we should not be trading in the first week of the expiry, new expiry, or we should be trading with minimum quantity. We should be deploying the least margin available. What about fires? I don't have any personal experience with fires, but I think it is okay and allows trading till 1 day prior to the expiry. IFL is okay. Yes, IFL is okay. Does live offline results matches with live auto? Mr. Praveen, again, if anybody tested, please let me know. No, it does not match. It will not match. Is there any way to see option chain of crude? Yes, you can see on the website of MCX. You can get in touch with me. I'll just give you the link. Harsh Desai, how does the system decide whether liquidity is there or not? No, system will not check the basically the number of contracts traded or anything, but it will wait. It will not take a trade when the market has reached to the extreme end of the range. We know by common sense that the liquidity will be less on extreme end of the range. Say suppose on that particular day, market has gone from 6,400, 700 to 6,500. So we know now that taking 6,400 strike is risky. So that logic has been built, so it will not take trade, and it will give enough time to the market, at least for half an hour, 45 minutes, by that time, it is very well known that the liquidity will come automatically. If the market has come to 6,500, your strike of 6,400 and 6,500 will become active. Okay, there is no rocket science in that. So the strategy has been built based on that, if market has gone extreme range and then the repair comes or the entry comes, it is definitely going to have either freak trade or huge slippages. Can your company build strategies according to our need on trade platform? You can get in touch, Mr. Nandi, on the number which I have given on WhatsApp number. We can discuss that. Why there is a gap between option expiries and future expiries? Okay, I have done a video on this. Do watch that. It's a little bit complicated. And Mr. Ashish, you can get in touch on direct message also. We'll explain to you. It is not, we don't have much time to explain. It's a big discussion basically. Kindly show the strategy results. I have already shared the results. I have already given the Google Sheet link as well. If there is anything more needed, please get in touch with me. Can I get strategy which can trade in Nifty till 3:30 p.m. and after that it trades in MCX? No, in TradeTron it is not possible because TradeTron, if you have made a strategy with one segment, you cannot include other segment in the same strategy. This was true till 6 months back or so. If they have changed it now, I don't know. I will check and tell you. But it is not possible as far as I know. On the same strategy, you cannot do MCX and NSE strategy both. Mukesh Gupta, also drawdown period. I did not understand the question. Drawdown basically in live trading has been around 2.5 to 3%. In paper trading, in some of the strategies in last 4 months, drawdown is 0, which is impractical. But let us take in worst case scenario a drawdown of 3%. Which are most liquid commodities? It is crude oil only as far as option is concerned, and then come to natural gas. But trading natural gas through options is even more riskier than crude oil. Slippages and its movement kills. Which strategy code after 3:30 p.m. to 11:30, Mr. Shiva Kumar? I don't know. All the strategies, which strategy code after 3:30, I did not understand. But all these strategy do trade after 3:30 till 11 o'clock. Which are most liquid commodities? I already told that. I joined a little bit late. Can I get the recording? Yes, Mr. Jaiswal. So, if extreme levels from liquidity point of view same for all the days, let us say plus minus 200 points from entry level. No, it is not 200 points basically. If market is moving in a very slow pace and slowly sliding down or up, even if it goes down by 600 points, we will not face liquidity issues. We will face liquidity issues in a quick fall or quick rise. Say suppose it came down from 6,600 to 6,400 in 15 minutes. We will face the problem of liquidity at those points. Any strategy in silver link in Algoways? I have strategies in silver M, NG and gold as well, but I am running them privately. If you are interested, because I don't want to put any risky strategy in marketplace. Okay. Especially for the retailers who do 1x or 2x, it doesn't convince me actually. But if you are interested and very particular, you can get in touch. Crude oil strategy code, please. I have given the link in this chat only. You can just click on the TradeTron link and you will find all the NSE, MCX and currency derivative strategies of Algoways. How to get the recording of this video? I joined it. Okay, this I'll put in TradeTron. Sorry, I'll put in my YouTube channel, and Mr. Nelson also will put it on Telegram. TradeTron YouTube channel as well. Which timeline is best for crude oil trading? Time frame. No, see, it is not time frame of chart on or anything. We are not trading based on charts or any indicator or anything. But if you are looking for a directional play in crude oil and all, I will suggest 15 minutes for intraday. What are returns after tax returns normally for a year, and how much minimum capital can one start with? Minimum capital for doing 1x of the strategy is from around 6 lakhs, and the net return could be around 3% a month. Net return means the gross return minus the expenses of brokerage and government levies. I'm not talking about the income tax. Income tax you have to consolidate at global level and then decide. Which are brokers allow same margin money available with both NSE and MCX? There are many brokers, almost 90% of the brokers are allowed. The one who don't allow, as well as I know, is Zerodha and Trustline. Zerodha, I don't have any experience. I don't have experience of any other broker which are not allowing the MCX or and NSE. You have to individually see the brokers. I think there is no more questions. Mr. Nelson, if you are there, we can close the discussions. Can we use the margin money from pledge share? Yes, you can use. But that again depends upon the broker. Like in Finvacia, people are using it. In IIFL, even it is much better. You don't have to, as of now, keep 50-50 cash and pledged margin. They allow it, you buy a share of 50 lakhs rupees after haircuts. If the margin is available is 45 lakhs, you can use that 45 lakhs completely for NSE as well as MCX trading without keeping any cash content also. That is one positive point of India Infoline. Any more questions? We can wait for 1 more minute and then we can close it. And I hope this was useful and we can get connected. You can join the Telegram channel if you are not a full-time Telegrammer, because full-time continuously talking in Telegram, that is something which is not healthy. Even if it is only serious traders with information, seeking information or giving information, it is fine. Zerodha don't allow the same margin of MCX. I think so. They don't allow, but you can check it. They don't allow because they have different entity for MCX. If you check your accounts also, your NSE account will be with one broker with one name of Zerodha, and MCX will be with different name unless they have changed it very recently. Earlier it was same for all the brokers, like Allice Blue Equity Private Limited or something like that, and Allice Blue Commodities. They were two different companies. So they will have two different accounts. You have to maintain separate margin. But Exchange and SEBI has allowed the same margin using in 2020 December. After that, it's up to brokers who are interested for good volumes and giving the same margin for all the segments. They immediately implemented, like Allice Blue and all the low cost brokers, they immediately implemented from the next day, next week maybe. And brokers who are not concentrated too much on brokerage, or they have enough volumes and broker, they don't mind keeping separate entity like Zerodha, they have not gone with this. Anything else? Anyway, we can get connected on outside this webinar on Telegram or WhatsApp, whatever it is. I'll just paste the contact info once again here. So we can sign off. I think we'll close this. I thank each and everybody for giving their time, and I wish you a happy weekend and all the best. If anything, let's get connected outside this webinar on Telegram. Thanks a lot.
Thank you, Deepak sir, for a wonderful session. Hello, everyone. So we will be uploading the recording for this video on a YouTube channel, as well as Deepak sir may upload it on his YouTube channel. So if you have any questions, the contact details are already available. and you can also write to us on support@tradetron.tech. I hope this session was useful. We will be conducting such going forward, and I hope that all the users will be able to take advantage of that. So yeah, so thank you very much, everyone. Have a wonderful weekend and good luck. Yeah, thank you.